Right, morning everyone. Welcome back to another live session. Today is Monday the 6th of March. I'm reporting to you from a sunnier place now. It's good to be here. It's good to be back home. So you will be seeing me still every day. I'm still going to be working. I still want to hit my target for March. I'm not there yet. And I'm pretty sure we're all going to get there together. It is scheduled to be a very busy week. I know I didn't do the Sunday overview yesterday, so we're going to cover that shortly. My main focus that I really want to get out the way and actually talk about is the fact that we're stuck between a rock and a hard place right now. You have China that is reopening, right? They're talking about this massive rampage in demand. They're talking about 5% GDP, so please write that down. It's a big number. And we need to understand what that will do for commodities, what that will do for risk, what that will do for demand. So that being said, you have China on one end trying to reopen, and you've got the Fed on the other end, trying to crack down on demand, trying to shrink the economy so that they can reduce inflation. So stuck between a rock and a hard place for sure. So you've got to choose on which side of the fence you're on, right? And for me, it's where the risk reward lies. And I really, I woke up early this morning thinking I was late for this call. And I really was thinking, am I going to be a little bit of an insight? I had a very big conversation on someone that wants to get involved and wants me to manage their money. And I really just, woke up early thinking about this. It was just on my mind all night. And I asked myself, do I want to be, bearish for a year, right? Or do I want to be bullish for the next 5? And that really got me thinking, especially in the crypto space. I'm super bullish in the crypto space, but I'm bearish right now. So there's really a risk reward of 1 to 5 there. Am I going to be bearish for a year, be bullish for 5, or are you going to be bullish right now and suffer that drawdown for a year, but still be bullish for 5? So it's something you really want to ask yourself. And that mindset then comes straight back into my trading. Do I want to be buying the Aussie right now? I think I do, right? The Fed are closer to the end than what they were to the start of their hiking cycle. But then you also look at China. China are so bullish on the open. They're partnering up with Russia, right? You got them two possibly getting in bed together, which will be so good for demand, so good for commodities, so good for risk, right? The S&P doesn't necessarily mean it's got anything to do with America. Right, it's global 500 companies. So we really want to ask ourselves, and let that be today's rhetorical question: are you going to be bearish for the next year, or are you going to be bullish for the next 5? And I'm obviously looking long term. I'm involved in some big projects right now. That's long term, and there again, I'm trying to get clients under my belt so that I can hit my goals in the next 3 to 5, having assets under management. So I'm bullish for the next 5. As much as I still look for further downside in cryptos, that's just because I'm bullish for the next 5. So I really wanted to just get that out the way and remind everyone that you got to think long term. All right, so money that you're making in FX now, don't be reckless with it. Start putting it aside. Start putting it aside because you really want to be a part of what's going to happen in the next 3 to 5. So let's get into this week. Let's get into what I'm looking out for. Euro Aussie back on my radar. Right, I know. I shout out Alexander. He spotted out that little head and shoulders on the higher time frames last week. I like it where it is, and I'm going to run through how we're going to manage this and trade it this week. So Euro Aussie, please write that down. Euro Yen. Last week was relatively good on the pair. I pulled out early. Quite recklessly, I think. Looking back in hindsight, this would have been a good 100 pip trade for very little risk. Right, very little risk, and I only pulled 20 pips out the market, so I wasn't even a 1-to-1. So me looking back, a trader as I am, I need to still ask myself, was that a good decision? Right? Was that a good decision? Could I have managed it differently? Yes, I really could have. And at the end of the day, I'm not perfect, right? And neither is your trading going to be. It's never going to be perfect. You're never going to constantly sell the top, get out at the bottom. You are going to have these situations. So you want to learn from it. And what I can take away from this trade is, I was right. I'm looking for that euro weakness. I'm looking for that yen strength. So primarily, I have a perfect relative value trade and bias that's probably going to continue. It's more than likely going to continue, and I'm looking to sell the rallies on this. So let's look at the higher time frames. Weekly time frame. Let's get rid of everything for a second. If you haven't already, really go study candlesticks. I know Josh kindly shared candlestick screenshots in the, I think it's Always Learning tab. So scroll in there, go have a look, or I'll share it again today. And alternatively, I have, I think, 3 YouTube videos on candlesticks. Go watch that. Candlesticks show us where something has been, right? Show us where something could possibly go. So looking at last week's candle on Euro Yen, extremely exhaustive, right? If price was bullish, it would have stayed there. Now, for a good explanation, look at this candle over here, right? Look at that candle and look at this candle now. I'm not saying we're going to have this massive crack to the downside this week, right? Similar to what happened there, but it just shows you the exhaustion. Shows you the exhaustion, and it should also show you that just because price was bearish doesn't mean you should sell straight away. You're more than likely looking to sell the rallies, and that can be seen in the wick, right? That's witnessed in the wick, which there again is a lower swing high on that next trading week. So I'm doing the same thing, right? I'm going to fib from the weekly high to the weekly low, and I'm looking to sell the rally. That rally is anywhere where we are right now, or it's somewhere where we are going to possibly be trading in the next day or two, right? It's going to be somewhere that we're going to be trading in the next day or two. So straight from the weekly high, weekly low, I'm not going to fidget with it too much, but I then now want to, delete everything and look for where I could be selling the rallies on the lower time frame. On the lower time frame, what can we see? We can see the price has broken 2 beautiful lows. So 2 scenarios here. I'm either going to sell, look for shorts pretty much where it is, or I'm going to extend this to the high. I'm going to look for one last little stab higher. So I favor the stab higher if we do get there, possibly 145. Why do I like that? There's a better risk reward, right? The same thing that I wanted, I think it was on Thursday's call. We had this crack to the downside, right? I didn't want to sell it there. I wanted it from 145, 300, because that's where the risk reward is, right? You always want to identify where the risk reward actually is. So, it's happened to me several times this year, this being the 3rd trading month of the year, and I have learned this quite a lot, that, even no matter where you think something is relevant and where you think something is good for the short, you really want to ask yourself, would it still be relevant a little bit higher? Would it still be relevant a little bit lower? And it's not a bad way to think, right? It really isn't. All you're doing is identifying where there is a better risk reward, right? So for me, 145 euro yen, that will more than likely be the most relevant trade of the week, something that is ready to run because that weekly time frame is ready. Something like euro Aussie, right, is something that I have to be very hesitant with, and we're going to go through that right now, because as much as we would have wanted it lower, price keeps stretching higher, right? It just keeps going for us. So if we look at this, price keeps stretching higher, and we've seen this, right, in anything. Looking at gold throughout January, gold kept on rallying. As much as I wanted it lower, it kept rallying until it tanked in February. Now we have March, right? We have March. So in January, what was it? It was a China reopening story, and the Fed were looking at slowing the pace of the rate hikes. February, that was January, February, we had the whole strong NFP, strong inflation, dollar rallying story. And now in March, I know I mentioned this last week, I'm going to say it again. Now in March, you have a combination of them both. So understand what you're dealing with. Have those 2 stories in par. If you want to go check it, I tweeted it, screenshot it, study it, because that's what we're playing with the whole month. So if you have that at bay, you can use that to your advantage. For example, if you're looking to sell gold, take it from A to B, get your 60, get your 70, get your 100 pips, lock that in, bring it back, right? Bring it back. No matter where we wanted this to go last week, it still reacted out of an area of interest and it rallied higher. Why? There's that demand. China's reopening. They're looking for 5% GDP. So if you were an investor, and this is what my macro mentor taught me, where would you park your money if you were a billionaire? Where would you put it? Right? You're going to put it in America, you're going to put it in China. In America, you got the Fed that wants to keep strangling the economy by the throat, raising interest rates, keeping rates higher for longer, which is really going to put pressure on businesses that rely on borrowing funds, right? Or you're going to park your money in China, where interest rates are low, right? They're looking for a lot of growth. You'll have a better return on your money there. So you want to keep that in mind. I understand it's a lot to process. There is uncertainty for everyone. It is never a picture-perfect trade all the time. Those are the two trades, Euro Yen, Euro Aussie. Gold, I'm leaving alone for now. Obviously, its first point of call would be pretty much, I would say 1840. If you're looking to short it, feel free. But just to be advised that despite us wanting it lower, price still rallied on Friday, right? Price still rallied. Beautiful little fib, intraday fib over there. So I do just think we could still see those rallies. Right? We still see those rallies. The S&P, right? I have been waiting for this for a while. It is now at 40.50. If you have been mapping it and marking it every day with me, it has been very tedious. I understand that I have missed a lot, especially with these intraday little rallies that were clean for shorting. But you really want to ask yourself, are you, or if you did take advantage of those little rallies, are you going to give all your money back if you don't manage your risk and this happens? So it can happen. I do apologize for the noise. I'll try to go somewhere else tomorrow. So looking at it from where it is, am I going to be shorting this right now? No, not necessarily. Why? Look at that rally that it had on Friday. Right, price looks extremely bullish in the daily time frame. So I want to understand that, fine, price is in my area of interest. I favor it lower because of an aggressive Fed. We know Powell speaks tomorrow, which I'm going to cover in a second. Right, I still understand that I'm bearish for the next year, but I'm bullish for the next 5. So what does that mean? I still favor selling the rallies in risk. I still favor gold lower at some point. Do you want to handpick what you're a part of? And I'm pretty sure if you have been following me and you have been watching these videos closely and making notes, right? Notes are so important, that your main objective is to take it from A to B. Where it goes after that, you don't care, right? You shouldn't care. Something I'm really taking a lot of pride in, and I have really been focusing on this year. And I'm really proud of the effort I've put in, because I used to be a very reckless person. Reckless in the sense that I was very risky, right? Very risky. And what I'm trying to do now for myself and trying to get registered for and so forth, I can't be risky at all, right? Any little sight of risk, then, there's people's pensions at risk, and you don't want to do that. You can't do that. You can't afford to do that. So you want to ask yourself, what is your focus? I know, shout out to Gurdrop, speaking to him the other day on, he's building a track record for himself, and it doesn't really matter on the funds. If you link your account to my FX book and you want to show an investor, you can always hide the balance. So it doesn't matter if you're trading with 500, it doesn't matter if you're trading with 1,000. What people actually look for is that their money is safe, right? Their money is safe. I was speaking to someone when I landed on Saturday afternoon over lunch that works for Investec. If you don't know who Investec is, they are a fund. They do deal with pensions and so forth. They're big here in Africa. And this guy's focus is to stay in the green, right? So still be involved, but stay in the green. That's his job as a risk manager, stay in the green. And that really, it baffled my mind, and it gave me something to think about, because at the end of the day, our focus is to stay in the green, right? So stay in the green. Let's say you're managing 2-3 million, you make 1 or 2%, you get your cut. That's when you really got to be trading 0.5%, 0.25% risk. Because your goal, if someone wants to see, proof of funds, or if someone wants to pull their money out because of some reason, it's still there, right? You haven't gone and risked 2-3% in a trade because it looks nice. Your objective is really just to, dip your finger in the honey and have a little bit of it. That's all you're doing here. And I understand, it's not as motivating trading with smaller firms, and I wish I thought about it the way I do now, and that's why I constantly speak about it. So in no way, shape or form should it demotivate you or make you feel like you're missing out if you're not managing larger funds. It really is a mental game when you get to that, but it is something that is a lot easier to manage if you work on the percentages now. If you can make 5%, even if it's on $1,000, it doesn't matter. It's how far you went into drawdown with that $1,000. It's how much you exposed. It's what your Sharpe ratio actually is. Your Sharpe ratio, by the way, go look it up. Let that be your homework for today. Go look at what Sharpe ratio actually is. It's your real risk reward, right? How far you went into drawdown for how much profit you've actually made. And if you have a Sharpe ratio of 2, that means you have a real risk reward of 2. On a position, you went in the drawdown of 100, right? Example. On that position, you made a profit of 200, right? So you want to ask yourself what it is that you're really chasing here. And I'm really trying to solidify that mindset with these calls, right? I'm not here to make you rich overnight, because I know it's not going to happen. If you go down that rabbit hole, you are going to lose everything, and that's not what I want for you. So what am I going to be doing on the S&P? I favor this lower at some point. I understand, very similar to Euro Yen, I understand there's 2 scenarios. Either price reacts and gives us what? Gives us those 3 words, which is a reversal, the correction, before that continuation in that direction, right? Hopefully. We've got big news this week. We've got Powell tomorrow, and you've got NFP on Friday, which I'm going to cover after this. So scenario A, price gives us that reversal from where it is, gives us that lower swing high, and we do then get involved looking for that continuation in that direction, the initial direction. All right, price is massively bearish right now. Why? It's clean as day. Right, it's clean as day. There's so much fear that the Fed are going to keep rates where they are. There's so much fear that the Fed are going to risk the economy to bring inflation down. So that being said, that's scenario A. And I'll actually go ahead and screenshot that to drop in the group. That's scenario A. Scenario B, let's cover that. Scenario B, we have Powell tomorrow. And, as I've mentioned before, Powell's job, his main focus is notifying the world what he sees, notifying the world what they're going to be doing, but not directly, indirectly. So he'll speak about PCE still being firm, right? There are still upside risks to inflation. That will be his tonality. The labor market remains extremely firm. People have jobs. If people have jobs, they're going to continue to spend, right? And that will keep inflation where it is. It will be harder for things to get better and get easier if people start losing jobs. Sounds sad, but it's true. So, you want to identify and ask yourself, with China reopening, right, is that going to spark demand and growth in the US? Is that going to put a lot more pressure on the Fed? The answer is yes, right? It really will. It really will. So we are heading into, as I referenced on, I think, Thursday or Friday, we are heading into, a macro shit show, right? There are people managing millions, right, almost billions, that still have no idea what's going on, right? So don't feel that just because you trading in these situations right now that it is going to be uncertain and you are going to lose your money. It's just how you manage it, right? It's about how you manage it. So think about that. Low downside, high upside potential, and that upside potential can be fed through a dripping tap, right? Can be fed through a dripping tap. So far in March, I've had a euro loss, I've had a GBP USD win, and I had a bit of a euro yen win, which wasn't much, but it adds up, right? It adds up. So you need to understand that a dripping tap is going to get you to where you want to be, and you're not going to have those big wins all the time. If anyone knows baseball, do you constantly have home runs, or do you constantly go to base? and going to base constantly with your team is what gets you those home runs to win the game. And you have to think about that, right? Same thing as football. An analogy of football is that if you are a football player and you're a striker all the time, there's no defense, you're still going to lose, right? Who's Ronaldo without some defense? Yes, extremely loud, I apologize. Who is Ronaldo without any defense? So you want to get your mind right. And I like having these conversations on a Monday because it really puts you in a position of power for the week ahead. You are not chasing, you are attracting, you are looking for areas of interest, you are looking for value where value can be found, and that isn't always in, getting involved in something every 5 minutes, right? Staring at your phone, constantly being involved. You don't want to do that. So, scenario B on the S&P is a bit of a lift, right? A little bit higher. I do favor these wicks over here getting recollected at some point, right? Some point. So 41, despite me wanting it, at 40, 50 all this time, I now have an area, right? I now have an area. Let's get that green. That's the green light. Got the green light in that area. So scenario B, would be for price to push up even slightly further into this range for me to then have a better-ish reward. Why am I doing this? Because I understand we have Powell tomorrow. I understand there can be some knee-jerk reactions. And I also understand that there's NFP on Friday. Right, let's run through that. NFP on Friday expected a lot lower than previous. Why do you think that is? Right? Over December, over the festive period, there's a lot of part-time workers that do get hired. If you go look back in history, by the way, if you want to do some more homework, right? So first part of the homework is to research what Sharpe ratio is and how you can improve your Sharpe ratio. Second part of the homework would be to actually go look at every single January non-farm payroll release. Right? It's always firm. It's always firm. There's always demand over the festive period. People spend money they don't have with credit cards. You've got credit card debts the highest it's almost ever been in the States. And that drives demand, right? You need workers. So I'm personally, on the flip side, thinking that we might have, a shock on this non-farm that we have this week, right? So what does that tell me? If I want to get involved in the S&P, I've got to be out by Friday, which I more than likely will be. That means, folks, if we do have, a shock in NFP, what's going to happen to dollar? Dollar is going to get hit. And what will that do? That will more than likely spike us on the S&P, but it will give me something. It'll give me euro yen, because we do have that dollar yen component, right? If dollar gets hit on Friday, dollar yen lower. We already want a strong yen, so we would have that lower anyways. Euro yen lower, but more importantly, euro Aussie. Remember, if you have a strong dollar, you're going to have strong GA, strong EA. If you have a weak dollar, it's the other way around. Right? If NFP misses on Friday, you're going to have a strong Aussie. Right? Think about this for a second. You have a strong Aussie. You've got China talking about 5% GDP. They're stretching their margins to try and provide this massive upside. I'm looking for euro downside. So you've got so much going on there that you really want to try and take advantage of. And yeah, I think that's pretty much it for me, really. How will I manage this? What would I like to see? I don't really see it going higher than where it is right now. So if you do favor getting involved, you could average your way in. It is a high risk position, so nothing more than a 50 pip stop from current price. And yeah, you're looking for fresh lows. Right? You're looking for these lows to get taken out. Ideally, this is what we should wait for. Right? If you're waiting for a high probability move, you're waiting for this to clean out these lows. Then sell the rally, more than likely 157. If this happens, you're going to have that capitulation overall. So 157, 157.50, probably your best bet overall. But yeah, that's scenario A. And scenario B would obviously be getting involved over here with a 50 pip stop. Hope you guys can hear me okay. I understand it's a bit noisy. I do apologise. So that's EURAUD. Yeah, it's going to be a very good week. So noisy. Apologise. It's going to be a good week. I'm super confident. So that's Euro Yen, Euro Aussie, the S&P. And look, if you're looking to buy the Aussie, there is, in my opinion, upside potential in the Aussie. I feel it's oversold. I feel there is room to the upside. I feel with this demand opening up in China, and I'm playing January's playbook. I'm using January's playbook now, and I favour the upside on the Aussie. I know we bought Aussie in January at one point, or it was late December. I know Morgan was long Aussie. We covered that on one of the live calls early on this year. That China narrative was there. We had to jump on the back of it. So what would I like to see? You know, if I'm trying to short Euro Aussie, I'm basically buying Aussie dollar. So you will more than likely have a same scenario of such that you could play, or even a bit lower, 67.50. You know, 67.50 will probably be 157.50 on the pullback on Euro Aussie. So it's the same thing, right? Same direction, same bias. You're just getting involved on the flip, right? On the flip. But yeah, that's what I'm looking out for, really. I'll obviously keep you updated every day, and I'm looking for this to be a good week. The reason why I want this week to be a good week, I want to show some numbers of this week in person. No jokes. All right, history is history, but you're only as good as your last trade. So I'm going to keep that in mind. I'll share how it goes. I'll share what I'm doing, what I'm saying, what I'm asking. I know Gerdrot asked a lot of questions recently, so I'll let you in on what I'm going to be doing. You know, a bit of a document that I've created with my history, with my statistics, with my track record. And then it's just networking. Right, you got to be confident in yourself. You got to believe in what you're doing, and you got to fully have conviction that you are the person that can deliver what someone is looking for, and you know you're going to have a piece of that pie. Right, you're going to have a piece of that pie, and essentially what you're doing is you're looking for people that are cash rich, time poor. Right, I'm sure every one of us knows someone that has a lot of money. Right, everyone knows that, and if you are looking to go down that route, then that's what you're doing, right? You've got to be fully convicted in what you're doing. You've got to know what you're doing. You've got to believe in yourself. And yeah, and I'll be honest, that's my focus in the next 3 to 5 years. So yeah, I will share, and I'm going to share that document I won't share it. I don't want to share it. I don't want you to copy it exactly, but I'll show it on the screen at the event. I'll meet up, and hopefully it gives you some pointers on what to look out for. Think of it like a pitch deck. Right, you are pitching someone a service, right, that they can't do, and they need you. You need them, but you don't need them to a point. So keep that in mind if that's a road you want to go down. And then yeah, just know that you're taking your trade from A to B. It doesn't matter what trade that is. It doesn't matter. Doesn't matter how much money you're managing. It's about how you manage that risk and what downside you have for what upside you can offer. And I think that is the real reward. You know, something that I've learned and I've been grateful, you know, being a part of certain companies and being in the city, being involved in certain conversations, because you realize that, you know, if you want to be a professional footballer, you can't just train in your backyard all your life. You're going to go nowhere. So don't be afraid of having these conversations. Don't be afraid of, you know, having a macro conversation with someone, because you don't know where it will lead, right? So start getting excited for what's to come for yourself and what you're actually in this for, and you'll appreciate it more. You know, you'll have that motivation to carry on. It's not just trading a trend line and hoping you can, you know, withdraw so you can buy something nice. There has to be more than that. There has to be more conviction, and you'll have that drive. That drive will push you through the hard times, and that's what you need. That's what you really need. But yeah, does anyone have any questions? I'm not in anything right now, but I would like Euro Yen. Euro Yen's probably the best one because of that weekly reversal, right? That weekly candle. I'm looking to sell that wick. Let me show you one last time so you're well aware of what I'm looking for. I obviously pulled out early last week, would have been a nice little 100 pips, but I am looking, let me show you in the weekly, I am looking to sell, right, on this type of wick. I'm not saying we're going to have such a weekly reversal. I hope we do. That'll be fucking amazing. But I am looking for, yeah, that little wick. Whenever that happens this week at some point, I'd like it. Right, I'd like that. So let's see what happens. Hopefully that does come through. And yeah, we can go from there. It'll be a good week. I'm fairly confident. I'm fairly understanding of what's going on. So we just need to be on the right side of it at the right time. Trading's all about timing. So, and understand, right? If you pull out a trade early like I did last week, it's okay. Right? It's going to happen. You are not going to get everything perfect all the time. And if you're looking for perfection, trading is the wrong thing, right? Because it's hindsight. Hindsight will fuck your brain around, and you don't really want to do that. Does anyone have any questions? Everyone all right? Alright, I'll end the recording so I can start uploading.